management of InfoEdge is now joining us. Chief Financial Officer is joining us this morning. Sir, thank you so much for taking out time for us. As far as the real estate bill is concerned, the transparency that it is increasing, it will have an impact on 99acres.com?
Yes, I think it will have an impact overall to real estate market, and since it will have an impact on real estate market, it will obviously have an impact to the portals as well. So some of the provisions of the bill are actually meant to create trust between customers and developers. Now, if that trust enhances, it would mean that there will be more transaction that would happen. So in the long run, with more transparency, more trust, I think it should have a good impact overall on real estate and to portal business.
Right. So, at least for a company like you, there would be a lot of cost which would be involved as far as data verification is concerned. You think with a lot of information coming in with this particular bill, you think that data verification cost could reduce substantially over a period of time?
Well, we are still kind of looking at the bill and what the consequence would be, and we are still not very sure how much of the information that will get shared with everyone. And would it be only on government sites, or would it also be kind of part of portals? So all those details have to be worked out. But as I'm saying, that more and more information available is certainly a positive factor, and it may lead to reduction in cost, it may lead to higher volume, the velocity may go up. So in all, I think it looks like it's a positive development,
Right. So let's focus on other businesses as well. You had an analyst meet of late. Within that, in Naukri.com, there is a leadership position that you have. You mentioned about how you would be looking to improve that position. Can you just talk about Naukri.com and what essentially is the focus now?
So Naukri.com, we have a leadership position. Our traffic share is now almost in the range of 70% as compared to all the traditional job portals. So we are growing from strength to strength. And then we would continue to innovate, bring out more and more products so that our engagement with our key accounts are kind of strengthened and broadened. So that's the overall strategy.
Right. As far as the mobile platform is concerned, have we seen a lot of new customers coming in from there?
Oh yes, I think if you really look at all our traffic share, almost more than 50% of sessions are now from mobile. So not only it's bringing more and more customer base, but it's also dramatically improving the engagement with the job seekers.
Right. And sir, about listing, the pool of listing has also improved after this particular launch?
Well, I don't think it really matters so much about the overall listing. I think probably that would not get impacted whether it's a desktop traffic or a mobile traffic. But as I said, that the level of engagement dramatically differs as compared to desktop traffic versus mobile traffic.
Right. Sir, further integration from here on, going into specialized services such as recruitment, hiring, placement. I know you would have, faced such questions earlier as well, which you would have said you're not looking at this point of time. Any sort of plans to go into that?
No, I don't think that we have any strategy to get into that. We are a classified company. We have a subscription revenue model, and we would continue with that. We are not closing the doors to any adjacency services. And we can keep doing that. But by and large, our focus will remain on the classified side.
Right. So let's talk about the other business which is probably achieving towards the break-even level. That's Zomato. Can you just tell us about that? Has the focus now shifted on to profitability?
Well, certainly focus is shifted to more efficient growth rather than just land grabbing. I would say that it would take about 18 months time, and that's the target that internally we are running for Zomato to go to break-even point. So I wouldn't say that they are close to breaking even at a overall company level. Yes, certain markets and certain cities where they are where they have entered earlier, they are closer to break-even point, and we are hoping that in next few quarters some of the markets would start breaking even. But company as a whole, we would target next 18 months for break-even.
Right. As far as Zomato India and UAE business is concerned, monster growth, that is growth of about 40-50% plus would continue?
Well, we haven't really kind of announced the rate of growth, and quite frankly, it's Q4. Many of the deals happens in last few days of the March. So let's wait and watch for the March end.
Right. So within Zomato, there have been a lot of changes in terms of delivery, in terms of focus on direct online orders. So such new innovations would tend to continue, which would be the focus area for better growth.
So right now, some of the markets where the growth rates are high, we are focusing on those markets, and we have added few lines of business. So apart from the core advertisement model, we have started delivery model. Particularly, we have done that at a broader scale in Indian market. And we will continue to focus on delivery so far as Indian market is concerned. We are also trying delivery model in few more markets like Middle East and some of the other countries.
Right. So Zomato has seen a lot of fundraising earlier, but now that the cash burn rate represents or comes down to a more sustainable level, you think at least for the next 4-6 quarters we may not need a very high level of funding in that?
Well, you are right. From Q3, Q4 onwards, the burn rates have come down to more reasonable level as compared to what it was H1. But still, if you really look at the entire year, the burn rate would be substantially high. And when we will consolidate our Info Edge accounts, obviously that all that will get reflected in our consolidated statements as well. Having said that, going forward, it would be more like the way the burn rate would be in Q3, Q4, which would be far more sustainable. If that kind of burn rate remains, and that burn rate is a result of both, not only that we have become more efficient in terms of the cost, but also the revenue is growing. So if that trend continues, then there would not be any kind of dying hurry to go out for funding. If there are certain inbound inquiries are coming, if investors are showing some interest, we can always look at it, but that's not our objective.
Right. So can you just talk about what is the sense that you're getting as far as corporates are concerned with Naukri.com? Are we seeing high tech sort of growth coming into the economy? The numbers that we got was 7% higher. Has that translated into better recruitment or better inquiries?
Well, I think as I said that we are still at the fag end of March. So in the next few days will really tell us how much of business we are able to close and what the growth looks like. But what we have seen so far, it looks to us that there is a little bit of momentum which has gathered in past 3-4 quarters, and it has remained at that level. There is no dramatic change as compared to what it was earlier, but I think it has been consistent.
Right. No, I was not trying to ask about the business of Naukri.com. I'm just trying to take the sentiment. What essentially is the mood as far as investments are concerned, people hiring is concerned? Can you just talk about that broadly, what it was 12 months back, or what we have seen in December, Jan, Feb in financial markets have also reflected, particularly towards hiring?
No, I think it's a mixed trend, because if you look at, just a few weeks back, globally the mood was not so great, so that, also would have had impact on the mood overall for the recruitment. So while some of the sectors are showing more confidence, some of the sectors we feel that it's more like wait and watch kind of approach. So IT, for example, since even US seems to be doing reasonably well, is still kind of good for us. We have still not seen manufacturing really firing as much as what we would have liked it to be.
Right. In terms of opportunities in the e-commerce space, you have always looked out for that. Anything that you can tell us? You continue to look out. There are a lot of companies that are looking for further investments.
Yes, certainly. We have a large pool of cash, and cash is very central to our core strategy. And we do think that next 2-3 years' time, good companies with much more reasonable valuation should be available. And if there is any opportunity for us, we would certainly be open to that.
Right, but do you think the overall market has now shifted towards who would achieve break-even first, rather than only looking at the business and the business model?
No, I think investors are looking at the quality of the burn, burn per se is not a bad news. It all depends on where the burn is, how the burn is, and is it kind of creating something which is enduring and sustainable over a long-term period. So if the burn is creating an asset in the virtual world, then I don't think that burn is is bad. If it's creating a long-term brand with a pull in the market, then I don't think that burn is bad. So people are now distinguishing between good burn and bad burn. And accordingly taking a call on the investment. I don't think again there is an issue around liquidity. I think liquidity is still there in private equity and VC world. It's a question of good companies.
Right. How would you look at valuations now and expectations? Much more reasonable than what they were, say, about 24 months back, and that's why investment becomes much better, or rather opportunities become much better?
I think valuation for companies which are very sound and which are very promising and has been executing well and has not got distracted with all the exuberance that was around last 12-18 months. I think they continue to get good valuation. But there are companies who were kind of, their foundation or the fundamentals were not so strong. The quality of burn was poor. I think those are the companies where even despite low valuation, probably the funding would be a challenge.
Right. Can you just talk about Policy Bazaar as well? How have we seen, not about the business and what's happening over there, just about the adaptability of the consumer on the financial product side to go and take it online versus, directly from some of these insurance companies?
Yeah. So whatever information that I have on Policy Bazaar, and I don't have full updated information about the penetration level, but I think Policy Bazaar particularly is a great brand. Whatever is the market shift that's happening between offline to online, I think major chunk of that is going to Policy Bazaar, and the advantage that consumers have are for real. I have myself used these sites over and over again, and I know as a consumer it's a great site. It gives a real monetary benefits. So I am sure the penetration level will continue to grow, and we really hope that it will grow exponentially. And since they are a one brand which kind of caters to everything, insurance and financial product as well, I am sure they are poised for a good growth in future.
Right. What I was trying to ask is that, what essentially is the adaptability of conversion? I mean, are you seeing new customers coming in? That's what I'm trying to understand. People who were traditionally going via agents or, directly to the company, yes. Are they shifting to the policy, or it's largely a repeat business?
No, I think certainly they are shifting to online kind of purchasing of insurance policy. As I said, as a consumer, it's a great value addition. So once you have used it, you are coming again and again. You go back, you tell your friends that this is what I got it. So they also start going online. So that trend is certainly on the upward side.
Right. And can you just tell us about this particular market? The addressable market size is much more than some of the other businesses that we have spoken, or the other businesses are slightly more mature than what this business is?
No, you mean Policy Bazaar business?
Right.
I don't have the numbers right away, but there is a lot of discovery that as we go along the business, we figure out what the market would be. I don't think few years back we realized how much the market that Zomato can cater to, or few years back we realized that how big the insurance market could be. Or for that matter, any of other businesses, like for example real estate. I don't think that we had a real understanding of how many brokers are out there and how much more penetration that we can have. So as we go along, there is a lot of discovery, but with the increasing internet trend, I think it's in a right direction so far as our businesses are concerned. We are riding on the overall internet growth story, so penetration is bound to increase, because internet is a very, very efficient channel of business.